After 13 rate rises with record high household debt levels and global uncertainty, a lot of us are asking, when will Australian house prices finally crash? The Australian property market has shown unprecedented resilience in recent years thanks to low interest rates, population growth, and supply shortages. But now housing affordability has become one of the biggest issues of our generation.
Houston, we have a problem.
So is the Great Australian Housing Crash imminent, or is the property market stronger than ever? To find out, let's look at the current state of the market. Looking at the data, the market's looking surprisingly resilient, showing strength and a positive trajectory. In fact, residential property listings plunged 5.2% nationwide in December 2023. The total number of listed properties dropped to 234,000 from 247,000 the year before. The second factor is property growth and supply of dwellings, which has a pretty big impact, outweighing the effects of the cash rate. Australia's population grew by 563,000 people over the year to March 2023, an increase of 2.2%. This is the largest increase in Australia's population on record and the highest growth rate since 2008. We've also seen consistently high auction clearance rates and pretty much the signs of a healthy market. Sales volumes have surged 15.5% on the same time last year after Reserve Bank had increased the rates 13 times. So when will Australian house prices crash in 2024? Before we break down, let's look at how we actually got here. Incredibly, Australia's residential housing market has regained all the strength it lost post-pandemic and has actually gone to a state of expansion, with sales well up on the year. In November 2023, house prices had risen 5.5% year to date and sat at a record high. This followed 11 straight months of price growth. The capital cities drove house price growth in 2023, rising by 6.6% over the same period compared to 2.8% increase in regional sales. Nationally, the total stock of properties for sale is historically low, sitting 23.9% below its November decade average. Buyers have been competing for a relatively low volume of stock. As a result, the number of inquiries per listing on real estate increased by 20.5% year on year. Over the 2023 year, house prices had risen at a moderately faster pace than units, increasing by 5.6% and 5% respectively. Looking forward to later this year, the Stage 3 tax cuts, which are due to kick off in July, could potentially benefit higher income earners and in turn lead to higher and increased demand for higher price housing. But the counter to all that is the Reserve Bank and the looming threat for the housing market. If the Reserve Bank were to further increase and tighten the interest rates, it could dampen housing market enthusiasm.
I don't know and I don't care anymore.
And at the extreme end, a rapid increase in interest rates could pressure the housing market and cause a correction or a crash. But in the current environment, this looks pretty unlikely. The Australian Financial Review surveyed 40 economists, and the median forecast was there's going to be an interest rate cut in September of 2024. Only 9 of the 40 economists interviewed predicted interest rate increases in 2024. Surprisingly, Reserve Bank data shows that 60% of borrowers are more than 3 months ahead on their repayments, showing that people are prepared for further interest rate hikes. But to that point, there are concerns about mortgage stress looming. There are reports that Australia's mortgage stress is at the highest level amongst developed nations, and it was reported that almost half of Australia's mortgage holders are in financial stress, paying at least 30% of their income to service their loans. This is one of the stress tests that can be used. Practically speaking, we have seen people cut back if they own multiple properties and had a home. Some people are choosing to sell their investment property to pay down their home and manage their debt more evenly, but we're still not seeing arrears creep up any more than historically. Equally, we've seen wage growth increases. Wages grew at 1.3% in the 3 months to September 30. This was the biggest quarterly rise in wages ever seen since the records began in 1997. This also pushed annual wage growth to a 14-year high of 4%. So things aren't looking too bad for the economy and the property market, but what are the key indicators of a potential market crash? Well, we're going to need this to answer the question of when will house prices crash in 2024, if they will. The first factor is higher household debts. The average household debt level grew by 7.3% in 2023, and it would be worth keeping an eye on these debt levels to make sure that people aren't getting over their heads. The Australian banking system is pretty heavily regulated. Banks are still required to use the 3% buffer, so if you're applying for a loan today, the banks will add a 3% buffer from the current rates, say 6%, assuming you need to service at 9%. So it's very different to America when the GFC happened, where they were basically using a pay slip. They weren't adding any buffer to your living expenses repayments to work out your loan affordability. Structurally, our market is very different from America during the GFC as well, where our loans here are full recourse. In America, they had a thing called jingle mail, and people would literally put their keys in the mail if they couldn't afford their home, send it back to the bank, and walk away from their home and their mortgage debt scot-free.
I'm out of here.
Here it's a different case. You can't just walk away from your debts. The bank will pursue you. If there's a shortfall, an issue there, you are fully liable. And if you default on your mortgage or have issues with your credit file, you have pretty big issues getting a home loan in the future. The second risk that could cause a crash in the Australian property market is the overvalue or oversupply of properties. Realistically, the high value of properties in Australia is due to a limited supply and attractive affordability for investors. The gap between housing supply and demand pushed property prices up in 2023 and potentially could keep pressure on in 2024. But it could take it off if there was a huge glut of properties that were suddenly built in a short period and hit the market. But this looks pretty unlikely. If you look at the chart with the current trajectory of population growth and houses completed, there is still a massive shortfall in how many houses we need a year just to house the current population. Hopefully the government does something to address this in the short term, but at the moment, with construction workers not on the skilled migration list, it's going to be a tricky gap to fill. They may also need to look at changing town planning and legislation to allow people to do more high density apartments or units or houses in inner city where there's already infrastructure, rather than starting new greenfield sites out where there might not be the same level of infrastructure. The third factor that could cause an Australian property market crash would be massive global shocks like the global financial crisis, the Asian crisis, even COVID can cause opportunities to sort of reassess and reshape economies. While the COVID shutdown weakened growth and momentum in the United States and the European Union, it didn't really have the same impact to our property market that it did overseas. The risk of a recession locally, potentially this could cause a cascading effect where if the economies overseas slow down, it could mean for less work here, unemployment could increase, and that would be a factor that could affect housing. But also, as we saw during COVID, when people let go of jobs, the banks stepped in and allowed people to have 12-month interest-only periods. They allowed them to restructure loans to add repayments to their home loan if they lost a job unexpectedly and help soften the blow. So even if this were to happen, there's potentially other triggers in place that the banks could do. The Reserve Bank could step in like they did during COVID and offer lower interest rates to make things more affordable, cut the rates to reduce the repayments. So again, while that could happen, it looks pretty unlikely given the current economic indicators. It's always a tough one as a first-time home buyer and an investor trying to work out, well, is now the right time? Should I wait for the crash and get the properties that are really cheap? Over the years, I've seen people try and make this prediction and say, yep, Sydney property prices are way overvalued. It's crazy how does it make sense? And that's the reality. It is really expensive and you might think it's overvalued, but at the end of the day, if someone's willing to pay it, that's what it's going to sell for. There's a limited supply of properties, and in areas like Sydney where you can't actually build more, there's water, there's physical boundaries there, and there's town planning regulations and red tape that are preventing more properties and more things being built. As far as timing the market, there's never going to be the perfect time to buy. Even Warren Buffett says you can't time the market. He hasn't the faintest idea of what's going to happen tomorrow. You need to look at your own situation and work out, well, do you want the stability of housing, a home to live in? As a property asset, if you're looking at investing, it's a different situation, but worth considering if it's part of your overall long-term strategy. So wrapping up, when will house prices crash in Australia in 2024? Well, sorry to say YouTube, it looks like they might not. The market's been incredibly resilient in recent years due to low interest rates, population growth, and supply shortages. With higher interest rates, high household debt, and global uncertainties potentially challenging that, we're probably likely to see lower growth rates, so we're not going to see the huge increases that we saw last year, which is good. It's better for a stable economy. We need housing that's affordable. We need to give people places to live. And hopefully the government does something to help increase the supply to make property more affordable.
I sure hope so.
What do you think is going to happen with the property market this year? Would love to know. Leave a comment below. And if you need any help with finance, here at Hunter Galloway, we're a mortgage broker. We help home buyers and homeowners across Australia. If you're thinking about getting into the property market this year as